Good morning, SMF MMT traders. In fact, let's talk a brand new enrollee here, Mr. David Beard, who is going to explain, and he's only been in the trading division. This is going on his second week in the MMT division, and he's using a system. And he's going to explain to me. I'm going to ask you, David, during this morning, we can see that, wow, look at, whoa, look at this breakdown, and explain to me what you did with MCP and what did you do?
Okay, I didn't catch the breakdown, but
did you went long off the bottom? Is that
right?
What you're
I went
saying?
long off the bottom.
Okay, so that's how you say it.
Right, I went long off the bottom.
At what price?
66.35.
That's right here in the buy action bar with almost a double teeny expansion at 20 cents. That meant that penny up part, then that follow through and holding that area and then coming right back though. Here's the key. You were long off of the bottom. So when the market maker took it down short to that bottom, it came back. When it tested and you seen that penny price action wick go flying up, did the system tell you that there was a 3-minute buy signal right here?
Yes, it did.
At 66.40, and
yes.
You're right at 66.35. All right, so now now you've got the buy action bar here. You've got increasing everything going your favor that the MMT platform tells you, and then you peak. Tell me where you exited.
I got out at really right. It came down off the high just a little bit.
Right here.
Yeah, I shorted it at the same price. It was probably about 67.53 or something like that.
Yeah. Notice how the trend ratio. Let's see what we have in here. Notice how the IR was only 35, and in this IR over here at that time. Well, at that time, that's what it was. And the reason why it slid this bid was because 35 is roll up and roll over Beethoven, right?
Right.
So if I rally on up and I can't go any further, then I know my price isn't going above that teeny line, right, David?
Right.
And have you found the system so far, in your view, with the training that you've had in the 5-day period, going on your second trading week? Have you had consistency in your entries? Have you had consistency in your judgment? And have you had consistency with your emotional transaction?
Oh, most certainly, especially the emotional side of it.
Why don't you tell me a little bit about that?
Well, it's always discerning to to take an entry, and have it go lower.
Yeah, that's right.
So this kind of takes that aspect out of it.
Okay.
If the signals aren't right, don't get in.
That's right. So if the MMT market maker platform, which you've never seen before, is quite different than a public platform. Is that true, David?
Oh, yes.
Okay. So if one uses it right, it's like a GPS system, and the emotional thing is that any of us, doesn't matter, even myself, after 30 years of it, it's easy to get involved and jerked and pulled in by the market, because the exchange model has certain ways of working on the public model. And the exchange model is to create excessive compulsive transaction behavior. Now, you waited for this, so that meant that there had to have been a disciplinary time that you were waiting, you were plotting, you were using the MCP 3-minute market maker platform to get. So what were you doing when you were watching this and you seen this double bottom price action? You had to have had a period of time that you had to use some discipline, didn't you?
Yes, I did.
What time frame was that?
Probably just about the time where the moving averages crossed over.
Oh, right up here?
Right.
Wow, that's a short. And they slid the bid all the way down.
Yeah.
Boy.
Yeah.
You'll learn this one, won't you?
Right, right.
Are you excited about these? Are you excited about these shorts like this?
Oh yes.
Yeah.
Yeah. I wish I'd have caught that. I just caught the move up.
What you did was what a market maker does. The market maker took the position long off of the market maker, took the price down, sold down the bid here. So the public sold off down into the move. Once they cleared the seller off here, there was some discipline in here so you don't get yanked in. And if using the platform correctly, you got the perfect entry and you took it up to the top to exit. So that means that the amount of teenies down intraday opening morning bell and the amount of teenies up off of the bottom, well, you're not getting nearly the. Now we're going to see if this is going to set up and want to break higher or not. Who knows? It might. It's elevated here. You've done excellent. So basically, David, this is the short side of the market maker on the opening bell, taking it down, then getting a move going, but there wasn't any more people here. As soon as it got shook down one more time and he started walking the bid, the ask higher, that's this over here, and this side of the price spread was being bought, that's what confirmed those 3-minute up moves. You did excellent. So tell me what you're thinking about now. If you stay below 45 and you're current at 0.48, that's what this line means. If the 0.48 goes up in value, what would you want to do? Tell me. If this current trend ratio goes up in value or goes down in value, which way will the movement go here? And if I'm putting you on the spot, that's okay. Do you want to take time to think about it?
I'm going to have to say I don't know.
Okay, well then
that's my best. I'm not sure.
All right, so let's explain it to you.
Okay.
So, David, we have your MMT, Mr. Mayo, here. He's going to tell you what the current trend ratio means relative to this current price. Okay? So, Mr. Mayo, if this was to go up toward 100, which way would the price go here? And if this was to go down toward 00, which way would the price go? So, David, here's what I want you to learn. Is that when this, so which way would that have to happen, Mr. Mayo?
Well, you'd have to get positive on the current trend ratio.
Well, now, if it falls in value towards 00, is it true that you're going to break out in price? Higher?
Yes.
Is the price action going to go higher?
Yes.
Right, so it doesn't even have to get in a positive territory, though, right? Just going in that direction. Now, if it's going toward a 60 or 75 here, then is the price action going to contract for David?
Yes.
All right. David, are you learning what that means?
Yes, yes.
Nice, huh?
Yeah.
And, you know, these are the kinds of things that we do here at SMF is that when we have a brand new person in and then we have some people that have been in the apprenticeship program for going on in their second quarter of their 12 months, like Mr. Mayo is we put the people together to help each other. And this is how this company was founded. And it was founded with that very interaction right there. So basically, David and Mr. Mayo, as you're assigned to him, he knows now what could have kept him stuck for days. And he was able to give self-disclosure so that now he can move on and really understand a little bit more in his actual second trading week. Do you understand the powerfulness of understanding this directional movement using your platform?
Oh, certainly.
And that's, now let me tell you something. Just so you know, David, that if this is going up towards 60, I already know this has fallen below 35. I already know. Okay?
Okay.
And price is going to go down. Watch. See? See how it ticked down? See how that ticked? Because I already know that if this is going to go up in numeral value towards 60, I already know that this is going to break below 35 in my market maker platform, which deciphers the buyer and the seller. So it's doing all the work for you. It's showing you with these ratios where the public buyer and seller's emotions are. So you're constantly monitoring their emotions rather than the market consuming your emotions, right?
Right.
Thank you very much. Hold on one moment. Mr. Beard, one thing about a teeny up and then a teeny down. Now a teeny in this case is 20 cents. So I go up 20 cents and this bar right here is saying yes, They know that this up bar is to get you to buy because you think you're going higher, and then it comes right back down 20 cents. And what happens in these kinds of zigzag movements in teeny consolidation is that the emotional compulsion increases in heart rate, and you start making transactions than you normally wouldn't. Teeny up, you buy for it to break out, it reverses a teeny down like that. It's teeny consolidation. These type of consolidations are trying to exploit you and exploit your emotion and exploit your transaction. Then what happens? The risk increases at a very high rate where more transactions will take place in these time zones, and the best thing to do is stay out of them. Once you've made your move, when you start getting into these kind of this 3 up and the 6 right down, teeny up and teeny down, our market maker platform prices the public. So this is where it's saying to buy, because you see the increase buy. But now it's in this. So it was trying to trigger you, and plus he sold right into the top of it. And the next bar started. Right when this bar starts below the teeny line, you take a stop market order right then. Bam! I'm out. You do not wait. These are where stop market orders are taken at the highs. You're not taking the stop down on the teeny where he bounces it back up. No. You got to be doing it right at the top of the transaction. Right. Do you agree with that, Mr. Beard?
Oh yes, and on the big green one there, I mean, I got stopped out on that. I was short, and it took me out, you know. And I said, well, I don't like the looks of this anyway. So
so now you know. Now you're going to back off, because one of the things is this thing in 6 minutes in this type of teeny up, and see the teeny down, see the teeny right back up. When transactions are made here, the exchange is trying to create excessive, compulsive behavior transactions in the public people, rather they're sitting isolated somewhere, or they're on a big trading floor, or even in a room like this. That's what these things do. And it's better to stay out of the way, because they're trying to exploit you. And then what happens is you get out down at the bottom and it bounces up like that. Then you start to get more frustrated in the transaction, and as the transaction becomes more frustrated for individuals, the risk increases in the transaction. That means that the volume goes higher than you normally would be doing. Instead of doing 100 shares, you're doing 500 on every one of these ticks. So it takes you $100 down, it bounces up, and you're sitting there thinking, well, I didn't have to lose that 100. Stay out of those. Let the emotion not, let that public emotion be theirs. And even right in here, there's still, you're above the teeny line, you're getting the way that everything is working. Look at here, you contracted down to 44 from below 50, and that's what would take it higher, but it's not by much. So still no need to get in this trade right here. You guys have already made your short trades over here, because you did excellent, shorting that move right here and then walking that dog. Mr. Beard was long all day, and he got out of the top, and now he's removing. He took a stop loss, but now he identified everything that we're talking about. The thing that he can relate to is this live, Mr. Beard. This is happening right now, isn't it? Time is 8:34 in Pacific Standard Time. The date is 5/9/2011. Do you find SMF quite different because it's live versus all of the stuff that you've ever seen and witnessed in the past?
Absolutely.
Okay. And the thing about it is, this thing will really break out and go up a couple more teenies if you can get north of 55. And this is contracted, and we have held the price because of it. So, Mr. Beard, at the time in this video where this current ratio was, you'll be able to look at this again. You'll be able to see that you're at 40, and you'll be able to see that 369 price stabilization, and that there's no emotion in it, and that in a narrow range consolidation until these breakouts are proven, you got to go north of 55. You're just coming up off the low, but it's not big price action, it's narrow range price action. You get above 55, we're breaking out up to the highs. So if that's the case, you would look to get a entry, drop it down 20 pennies from the current price, and let's see what happens at 55. So knowing when to pull the transaction is what I'm saying, is during teeny consolidation, stay out. That's these right here. That's this. Stay out. When we start seeing that and you come down, it did, it went back up, that's when we know that things changed from this environment. And then you would move in and take it up, and you're going to have narrowed, if you make, you know, if you're doing 500 shares and you're going to take that quick 35 cents, there's nothing wrong with that. Those are pretty good wages for less than a minute's work. Good job. I hope that so do you feel helped, Mr. Beard?
Oh, sure.
Thank you very much. Congratulations on your trade.
Thank you.